Thank you, Mr. Chairman. Well, it's been 7 years since the Dodd-Frank Act was passed, a monumental triumph of ideology over compassion and common sense. All of the promises of Dodd-Frank were broken. They promised us it would lift the economy, Mr. Chairman, but instead we are still stymied in the weakest, slowest recovery in the post-war era. They promised us that it would end too big to fail, but instead it cynically codified too big to fail banks into law and backed it up with a taxpayer bailout fund. It promised us, Mr. Chairman, they promised us that it would lead to a more stable economy. But instead, the big banks are bigger. The small banks are fewer. We're losing a community bank or credit union a day. Our corporate bond market, a key component of financing of jobs, historic levels of volatility and illiquidity. They promised us, Mr. Chairman, that it would help the consumer, but instead we see free checking cut in half at banks. Bank fees are up. The ranks of the unbanked have increased. For many credit-worthy borrowers, they're paying $500 more for an auto loan. Have you tried getting a mortgage recently? They're harder to come by and cost hundreds of dollars more to close. Every promise of Dodd-Frank has been broken. And, Mr. Chairman, we hear about it every day. I heard from Julianne, a banker in Massachusetts, and she wrote, "We've experienced a spike in loan declines to women. Further investigation identified that women attempting to buy the family home to settle their divorce and stabilize their family were being declined at a high rate due to the Dodd-Frank qualified mortgage rules." Dodd-Frank hurting recently divorced women. I heard from Alan in New Hampshire, who talked about his need for a new car, but he couldn't find a loan from a bank, and he said, "But for my local dealer's efforts on my behalf, there's no doubt I would not be driving my current car." And this was a desperate situation, for I am the sole income earner for my family. My wife is ill, and we have 2 young children in school. After my old vehicle broke down, I needed to find reliable replacement transportation so I could get to work and continue to provide for my family. Please ensure that financing car and truck dealerships are not stymied by Dodd-Frank's CFPB. I heard from Maxine in Salt Lake City, who talked about her company. Said last February we were awarded a major catering contract for all food services in the new Performing Arts Center. The new contract will require us to make a major investment in equipment and small wares. We'll be able to hire 50 additional staff. Unfortunately, red tape got in the way. Turned what should have been a golden opportunity into an unbelievable headache. 3 banks informed us that our rating, according to new bank regulations imposed by Dodd-Frank, disqualified us from consideration. Mr. Chairman, letter after letter, email after email, harming working families, harming small businesses, crushing community banks. Fortunately, Mr. Chairman, there's a better, smarter way. It's called the Financial Choice Act, and it's going to create hope and opportunity for investors and consumers and entrepreneurs. And it stands for economic growth for all, but bank bailouts for none. Contrary to Dodd-Frank and what every Democrat will come here today, my friends on the other side of the aisle, and defend, we will end bank bailouts once and for all. We will replace bailout with bankruptcy. We will replace economic stagnation with a growing, healthy economy. We will ensure that there will finally be pay increases, wage increases for working Americans who haven't seen a pay increase since Dodd-Frank became law. We'll replace Washington micromanagement with market discipline. We will ensure that we replace taxpayer money with private money, because for every bank who will have a 10% simple leverage ratio, which is analogous to having a private insurance policy against bailout. We will let them have that Dodd-Frank off-ramp, and that's so important. But, Mr. Chairman, we're also going to hold Wall Street accountable. Toughest penalties that they've seen, and no more bailouts. Perhaps that's one of the reasons they oppose the Financial Choice Act and they support the status quo of Dodd-Frank. And we will make sure needed regulatory relief for our small banks and credit unions, because it's our small banks who lend to our small businesses that create the job engine of America and make sure that the American dream is not a pipe dream, but instead it is a dream and a vision where we will only be limited by our imagination. I reserve the balance of my time.